Ladies and gentlemen, welcome back to the channel. I hope you guys enjoyed your weekend, but this upcoming week is going to be very, very eventful. Not because AMC is looking to break out on a technical basis. We're going to talk about Friday. Friday was a big day for AMC stock, but also the broad markets. We have the CPI report, which comes out on Tuesday, as well as some other events next week that could shine a little bit of a bullish tone to the market. So that's a big key, and that's something we're going to talk about really in depth, but also everything else you guys need to know about. So let's get straight to it. Hit that like button, subscribe to the channel, source those comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and let's get straight to it. Now, we're going to talk about AMC quite extensively here in this video, but I first want to get to why the markets could be bullish this week and what data I'm looking at to support that. So really, bottom line to a lot of this is lower CPI will likely be bullish. Now, there's also, that chance the CPI does come in much higher, and that could scare the markets. But as of right now, I think the markets are firmly expecting CPI to go down, right? And think about what happened the last CPI report that we got. We were expecting, I believe it was 9.1 or 2% inflation. Can't remember the exact, tenth, hundredth of a decimal point, but it was very high. It still came in very high. I believe it was 8.9%, but it was a little bit lower than what the markets were expecting, right? So if we get something along those lines that happens again, because at this point, some of the Fed's policy that they were doing in, February, March, April, May, June, that's starting to affect the markets now. It's starting to hit margins. You're starting to see a little bit more, bankruptcy concerns, or as we call them, junk bond yields that are spreading in a massive way. You're starting to see signs of corporate credit becoming harder to obtain. People are starting to slow down. Believe it or not, it's not as crazy as what investors were expecting it to be. We didn't fall off a cliff as far as economic activity and people spending money, but people are starting to slow down. So inevitably, the price of oil going down, people slowing down their spending, can we call them spending habits? At least if you're in North America, people like to spend money. You're not seeing as much of that. You're seeing people trying to sell items at big discounts. If you've been to a Walmart or a Target, you'll notice the discounts that are on the shelves. It's very noticeable if you're looking for it, right? So all of those factors could lead to a lower CPI than expected, even though it's still going to be very high. If it's better than what it could have been, or at least didn't go higher, people are going to start looking at this as, hey, inflation has peaked, maybe for real, and we probably want to be bullish on stocks over the next 6 to 12 months. But most importantly than that, the markets are forward looking. So we've got a lot of comments from Fed officials, like Fed Williams, Fed Bullard, that they see interest rates, or Fed Daly even, which was one of the most dovish members of the Fed, saying that they see the federal funds rate going to and staying around 3.5% to 4%. Well, if the markets for September 21st are pricing in a 87% chance of a 75 basis point rate hike, that's going to put the federal funds rate to about 3.25%, because it's currently at 2.5%. Well, in that case, you have this 75 basis point rate hike, and then you got a 25 basis point rate hike, and then the Fed's going to stop. Or you have two back-to-back 50 basis point rate hikes, maybe three if we go as high as 4%, and then the Fed is going to stop. We're still going to see balance sheet reduction, and that's going to be its own can of worms down the line, but we're not quite there yet. And in the meantime, it looks like the markets might start to say, hey, the tightening might start to be over pretty soon. So I wouldn't get overly bearish right now. Yet again, you can make the same argument that if inflation remains well higher than the Fed's 2% target, and we're not going down, 1% on these CPI reports, or a 0.5%, if we're only going down like 0.10, a tenth of a percent or 0.2, that's not going to be good. And the markets could portray that attitude, especially if we get more Fed speakers that say maybe we have to keep raising for longer. Nonetheless, we will get that information coming on Tuesday. The inflation rate year over year and core inflation rate year over year coming at 8:30 in the morning. And then on Wednesday, you do have PPI month over month for August. You have some ECB events that also happen on Wednesday as well. And that could be important for our markets considering what's going on with the whole energy crisis over in Europe. If they don't have energy over the winter, well, that's probably going to be a big problem. Or if it gets super expensive, could affect inflation. The markets might pay a little bit more attention to that. Thursday, you have retail sales month over month for August, 8:30 in the morning. Import prices, export prices, Philadelphia Fed, employment, new orders, Fed prices paid, Fed business conditions. You have a lot of data that really comes out this week, but the biggest one probably going to be the CPI report, and even this, the Michigan Consumer Sentiment Preliminary Survey for August. Pay attention to what the Fed says. The Fed always says inflation expectations. That's a big part of their goal of fighting inflation, is to keep those expectations down. And one of the best gauges of the consumer or expectations for inflation, wage growth, job security is in those preliminary surveys. So that will be important, and that is why that is highlighted in red as a big volatility catalyst, because it will move the market sharply once it does come out. Beyond all that, if we get a bullish response in the markets, AMC stock is going to rally. Friday was a taste of what a rally could look like with AMC, and AMC was up 12.5%, even in after hours, up 0.10%. Ape was up 8.22%, quite literally going ape as well, down about 1.27% there in after hours. But why am I so excited about AMC? Because I've had these lines and these moving averages drawn up, and on this chart, as long as I've been making videos, for the most part, most of these lines stay the same. Moving averages, they always stay the same. So we can always look back and refresh on accurate information. What happened the last time AMC hit the 200-day moving average, or the 100-day, or the 50-day, right? So what's going on right now? We were above the 50, 100, and 200-day moving averages during this last rally. We sharply fell under the 200-day. All of these important blue lines as well. We just broke through under everything. Even this bottom one I've had drawn out at about $8.50, broke under that as well. Hit a low of $7.89 per share. I did point out it looked like we were finding some support, and then what happens? Well, we're back above that level, about 880, about 890 for the stock, and that's really where we opened as of yesterday, was $8.86 per share. Well, yesterday meaning Friday, and then you absolutely rallied, going straight above the 100-day moving average. And usually when you break out above the 100-day moving average, as history has showed us, you will usually see, a pretty big rally. Even this rally back here was a 20% move once we broke out above the 100-day moving average. And then yes, we did come back down, but still over a 20% move once we broke out above the 100-day moving average. What happened back here when we had a clean breakout above the 100-day moving average? Well, from that point of breaking the 100-day moving average and the peak, the stock was up 78% in only about a week. So usually when that happens in that fashion, and you really don't give anything back by the end of the day, like there is no top wick on this candle, it usually ends up in a very big rally in AMC stock. Now, obviously, things can be different times around, and I'm not a fortune teller. I don't know what will happen. Come to your own conclusions, all that good stuff for just in general, right? Don't listen to people, right? Come to your own conclusions. But what the data says, and what the data supports, and why I like to look at data, is because trading algorithms control the stock market, right? You want to pay attention to it. And from what the data says here, AMC stock probably going to move substantially higher to the upside. Wouldn't surprise me to see a move closer to about the 200-day moving average at least, which would be about a 22.5% rally from here. That's kind of my price prediction for the kind of what I expect is around the 200-day moving average, maybe as high as $12.77 per share, but definitely around that $11.34 per share mark. Maybe $11.50 is kind of where I would put the price prediction. If I were to say on the high end, probably around $12.50 to $13 by the end of this week if we get that bullish reaction. Now, let's talk about AMC stock and the actual short interest, because that's still very, very high at 21.5%. Free flow out and loan 38%. Shares out and loan 196 million. Days to cover 4.36 and 100% share utilization. Now, you have the cost to borrow max at 25.72%, cost to borrow average at 22.17%, and cost to borrow minimum at a negative 1%. And over here on APE, you have about a 9% short interest. Shares out on loan 47.35 million. Days to cover 1.47 and 88.64% share utilization. You have a cost to borrow max of 13.33% and cost to borrow average of about 9%. Now, in my personal opinion, AMC is the trade and will always be the trade in regards to AMC, APE, GameStop, BBBY, or any other stock. AMC is that trade for me, at least, personally. So if I had to choose between AMC and APE, which one I'm going to bet on necessarily, I'm going to go with AMC. The data supports that AMC could be the bigger runner, and that's exactly what we've seen on Friday. So that in a nutshell is kind of why I think this week could be more skewed to the bullish side, and kind of what I could expect to see with AMC stock in between $11.30, $11.50 range to, $12.50, $13 per share. That's really what I expect. Anything under or above that is going to be out of my expectations. I wouldn't expect that, but it'll be nice if it does come. If Friday was a glimpse into this upcoming week, it is going to be a very exciting week. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time, link down below in the description of this video as well. And on top of all of that, there's free stocks down below in the description with Webull, Moomoo, and Public. Make sure to take advantage of that, because free money, after all, is free money. And there's no better money than free money. So thank you guys for watching. I will see you in the next one.